Hi, welcome back to the channel. In today's episode, I want to talk to you about a very unusual development in Russia. Because while most of the world continues to move towards contactless payments, mobile banking, digital wallets, and an increasingly cashless society, Russia is moving in the opposite direction. Russians are taking money out of banks and returning to physical cash. And this is not a small movement. Since the beginning of 2026, the amount of physical cash circulating within the Russian economy has increased by around 1.56 trillion rubles. That's the equivalent of around 20 billion US dollars. And as we'll see from the charts in today's video, if you've been missing my charts, then you're going to get a couple today. This is the largest increase recorded over the last few years. But this is not simply a story about people suddenly deciding that they prefer banknotes. This is a story about fear. It's about internet blackouts, about card payments failing, tighter controls over bank transfers, and higher taxes. And ultimately, it's another example of the war in Ukraine reaching deep inside the Russian economy and changing the way ordinary people live their lives. So in this video, I want to go through the two charts, look at exactly what the figures are telling us, and explain why this apparent return to cash is potentially very bad news for Russia. But before we get into those details, could I ask you to give me a thumbs up for this video? Please hit the subscribe button if you're not already a subscriber. And if you can see the hype button, then please hit that, because it really does help me with the algorithm and also puts a smile on my face and means that more people will potentially get to see this video. So let's start off with the first chart. What this chart shows us is the increase in the amount of physical cash circulating in Russia during the first few months of each year. And the important thing here is not just that the amount has gone up. Cash in circulation can rise for perfectly normal reasons. The population may be growing, prices might be rising, businesses may need more working capital. And there are usually seasonal increases around holidays and the end of the year. But the scale and timing of this particular increase are what make it so significant. Since the start of 2026, Russia has added around 1.6 trillion rubles of physical cash into circulation. To put that into context, that's around 20 billion US dollars of additional banknotes and coins moving around the economy in only a matter of few months. And when we compare that to the equivalent periods shown for the previous years, 2026 stands out very clearly. Earlier years show movements in cash, but nothing approaches the current surge. There was a notable increase during the pandemic period, when people around the world became worried about access to banks and started keeping emergency cash at home. There was also a major rise in September 2022, when Vladimir Putin announced Russia's partial military mobilization. That was a period when hundreds of thousands of people were suddenly worried about being called up, leaving the country, or losing access to their money, so they wanted to get their hands on the physical cash. But the latest increase is even broader than that. This is not a single panic occurring over a few days. It appears to be a sustained change in behaviour in Russia. In April alone, the amount of cash circulating was around 600 billion rubles. Excluding the normal December surge, that was the biggest monthly increase since the mobilisation announcement in September 2022. So the chart is effectively showing us that Russians are building a financial insurance policy. They're taking electronic money held inside the banking system and converting it into physical notes that they can hold in their homes, wallets, and businesses. And one of the biggest reasons for this is the Russian government's repeated shutdown of mobile internet services. Russian authorities say these shutdowns are necessary to protect cities and strategic facilities against Ukrainian drone attacks. Some drones can use mobile networks, communication signals, and other data connections as part of their navigation or control systems. So when there's a perceived drone threat, the authorities restrict or completely disable mobile data across large areas. The problem is that modern economies also run on those same networks. Payment terminals need connection. Banking applications need connections to the internet. QR codes, you have to be able to go online to be able to get that QR code to work. Taxi applications such as Uber and delivery services such as Deliveroo, online marketplaces like Amazon, and navigation systems all need connections. So when Russia blocks mobile internet in an attempt to disrupt Ukrainian drones, it also disrupts large part of Russia's own domestic economy. Customers arrive at shops and discover that their cards won't work because there's no internet. Businesses can't connect to payment processors, so they can't take payments. Taxi drivers can't receive bookings because they've got no service. People can't access mobile banking applications. Tickets can't be downloaded if you're going to a gig, for example. Transfers can't be completed. And although some card transactions can technically be processed through fixed broadband connections, many smaller businesses rely entirely on mobile networks. This means that cash becomes the only reliable backup. A banknote doesn't need any Wi-Fi, it doesn't need a mobile signal, and it doesn't need approval from a payment processor, and it can't be blocked by an app. That helps to explain why people are withdrawing more money, but it doesn't explain all of it. There is also a growing fear of financial surveillance and restrictions in Russia. Russian banks have introduced tighter controls over transfers and account activity, partly in response to fraud, money laundering, and sanctions. People can find their cards temporarily blocked, transfers may be delayed or questioned, customers may be required to explain where money came from or why it's being moved. For law-abiding customers, this creates inconvenience and uncertainty. For businesses operating partly inside Russia's enormous grey economy, it creates an even stronger incentive to use cash. And that brings us to the second chart. This second chart shows the overall amount of cash being held outside the Russian banking system. And this figure has now risen to more than 19 trillion rubles. That's approximately $240 billion. The year-on-year increase is around 17.5%. Again, the important point is not simply that Russia has a lot of cash in circulation. Many countries have large amounts of banknotes outstanding. The important point is the speed at which money is leaving bank accounts and moving outside the banking system. When money is deposited inside a bank, the bank can use a proportion of those deposits to fund lending. It can provide loans to businesses, it can finance mortgages, it can support investment and working capital. But when customers withdraw that money and hold it physically, the bank loses part of its funding base. The money has not vanished from the economy, but it has effectively been removed from the banking system. And that is now contributing to what's known as a liquidity deficit. Russian banks reportedly faced a liquidity shortfall of around 2 trillion rubles in June. The Russian central bank believes that this gap could potentially increase to around 3.6 trillion by the end of this year. The central bank says it's providing enough liquidity to keep the banking system stable and that no emergency measures are currently required. But the need to provide that support tells us that there is a real cost. The Russian banking system is already under pressure. Interest rates have been exceptionally high as the central bank has tried to control inflation. Corporate borrowing costs have risen sharply. Bad loans are now becoming a growing concern. Credit growth is slowing, and the wider economy is losing momentum as the wartime spending boom begins to fade. So the last thing that Russian banks need is a large-scale withdrawal of deposits. It makes funding more expensive, it reduces the money available for lending, it increases the banking system's dependence on the central bank, and it potentially weakens the transmission of monetary policy. When the central bank changes interest rates, it relies on commercial banks to pass those changes through the economy. But if people no longer trust banks or digital payments, more money sits outside that system. That makes the economy less efficient and more difficult to manage. There's also the issue of taxation. Russia increased its main rate of VAT, value-added tax, to 22% at the beginning of 2026. Higher taxes put additional pressure on consumers and businesses, and cash makes it much easier for a business to understate its sales. A digital payment automatically creates a record. A cash payment can disappear. A cafe, shop, taxi driver or tradesperson can take physical money and simply fail to report the full transaction. That means less tax revenue for the Russian state at precisely the moment when the government desperately needs more money to finance the war, support the military-industrial complex, and cover its expanding budget deficit. So Russia may now be facing a damaging cycle. The government raises taxes because it needs more revenue. Businesses respond by moving more activity into cash. That reduces the amount of reported turnover, tax receipts then underperform, the government faces an even larger funding gap, and that creates pressure for further tax increases or greater enforcement. Cash also makes corruption money laundering and capital flight more difficult to detect. So although physical money provides resilience during an internet outage, a large and sudden migration towards cash can expand the shadow economy. And I think this is where the wider symbolism becomes more important. Russia spent years building a highly developed digital payment system. Before the invasion of Ukraine, it was one of the world's fastest moving markets for contactless and mobile payments. Russia's banks processed enormous numbers of transactions. Its faster payment system allowed customers to move money instantly using phone numbers or QR codes. The country was not technologically backward at that point. It was extremely advanced. But the consequences of the war are now pushing parts of Russian society backwards. People are carrying physical cash because they don't know whether the internet is going to keep working. They're keeping banknotes at home because they don't know whether their card will suddenly be blocked. Businesses are returning to paper records and offline systems. Taxi drivers who take cash no longer need to search for functioning Wi-Fi. People are using printed maps because online navigation has failed. Some businesses have even looked at older technology such as pagers and walkie-talkies, which seems ridiculous. That is how extraordinary things are in Russia in 2026. The Russian government is attempting to protect itself against modern drone warfare by partially switching off the infrastructure of a modern economy, and the economic consequences are substantial. During one 5-day period of major internet disruption in Moscow, estimated business losses were between 3 and 5 billion rubles. Other estimates have suggested that mobile blackouts can cost the economy around 1 billion rubles per day. These losses come from missed transactions, cancelled journeys, delayed deliveries, reduced productivity, and businesses simply being unable to operate. And there's also a deeper concern. The authorities may be using the drone threat not only as a security justification, but also as an opportunity to increase control over Russia's internet. Russia has been developing what it calls sovereign internet, a system that could theoretically operate separately from the wider global web. Access to foreign platforms has become increasingly restricted, VPNs have been targeted, messaging services have faced disruption, and the government has encouraged the use of state-approved platforms. So ordinary Russians are not simply worried about technical outages, they may also be concerned that internet access and digital financial services are becoming increasingly conditional on government approval. And when trust declines, people turn to the most basic form of money available: cash. Now, it's important to say that cash itself isn't really a bad thing. Every country needs a resilient backup payment system. Recent power cuts, cyber attacks, and banking outages in Western countries have demonstrated that a completely cashless society also carries risks. But the Russian situation is very different. This is not a carefully planned resilience strategy. It is a defensive reaction to war, disrupted infrastructure, government controls, and economic uncertainty. That is why the charts we've seen in today's video matter. They provide a visible financial measure of declining confidence. Russians are effectively voting with their wallets. They are saying that they no longer fully trust the internet in Russia, they no longer fully trust payment terminals, and in some cases, they no longer trust banks or authorities who are controlling them. At the same time, Russia's economy is slowing rapidly. Banks are under pressure, the government budget is deteriorating, taxes are rising, inflation remains a problem and is now increasing again, and the country is becoming increasingly isolated technologically and financially. So this return to cash is not just old-fashioned, it's symptomatic of an economy becoming less efficient, less transparent, and less connected. Russia may still possess advanced technology, sophisticated banks, and modern payment systems, but if citizens believe those systems may suddenly stop working, then the value of that technology is dramatically reduced. Ultimately, the real story here is about trust. Digital economies rely on trust that electricity will remain on, the internet will remain available, banks will process payments, and the government will not arbitrarily restrict access. When that trust disappears, people reach for physical cash. And the fact that Russians are now doing so on a scale that we've seen in today's video tells us the domestic consequences of the war are continuing to spread all across Russia and the Russian economy. So hopefully you found today's video useful, informative, and most importantly, thought-provoking. If you have liked what I've said, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already, and hit that hype button if it's available to you, which will boost this video and show it to more people. Thank you so much to everybody that's supporting me. If you've bought me a coffee or sent me YouTube super thanks or signed up as a patron or a member, I really appreciate that support. It really genuinely helps to keep me going. I think I would have stopped doing this a long time ago without your support. So thank you. Really, really appreciate it.